One second, we just had a minor technical issue. But okay, before I introduce our panelists, I'd like to describe the Western Governors Workforce Development Initiative and go over a few logistical details for today's webinar. The Western Governors Workforce Development Initiative is the major policy initiative of current chair, Governor Dennis Daugaard of South Dakota. It is bringing together policymakers, educators, business leaders, and others working in workforce development to bridge the gap between prospective workers and employers in the West and provide a framework for states and stakeholders to share best practices in workforce development. The initiative kicked off this fall with a series of 4 workshops held in South Dakota, Colorado, Oklahoma, and Washington. At the workshops, governors and participants alike discussed the changes we have already seen in the economy and what to expect in the coming decades. A common theme was that workers today and in the future need to adapt to change quickly and keep their skills and education up to date over the course of their careers. This webinar will examine policies that can encourage a culture of lifelong learning. We hope to have a very interactive webinar today, and my colleague Kevin Moss will now explain how you can submit questions to the panel.
Great, thanks, Lauren. Hi, everyone. So we're going to have some opening presentations from all of our panelists and then turn to a moderated discussion. And for that portion of the conversation, you can use the chat box function, which is on the top right of your WebEx screen. And at any point, you can send questions directly to me, and then I'll ferry them over to Steve, and he'll incorporate them into the moderated discussion. So please send them directly to me. I'm Kevin Moss. Thank you.
Great. Thank you, Kevin. We have a really excellent panel today. I'm really excited to hear their conversation, which will be moderated by Steve Voytek. Steve is the Federal Government Relations Manager for ACT. In this role, he advocates for the organization's federal policy priorities on Capitol Hill. Prior to this, Steve was the Government Relations Manager for Advanced CTE, the national organization representing state and territory leaders for career technical education. Steve also served as a research associate for the National Association of Workforce Boards, focusing primarily on economic and workforce development policy and legislation. So he brings a breadth of experience to this topic. So with that, I will turn it over to Steve, who will introduce the rest of our panelists and frame the discussion that we'll be having here today. Steve?
Great. Thanks, Lauren. Again, my name is Steve Voytek. I am the Federal Government Relations Manager for ACT. Many of you may know us by our college admissions exam, but more broadly, we're a mission-driven organization dedicated to helping people achieve education and workplace success through high-quality assessment and research. As Lauren mentioned, today's webinar is going to be focused on lifelong learning, particularly through short-term education and training programs for working adults. I'm joined here today by several experts in workforce development and education policy who are here to talk today about some emerging best practices in the post-secondary and adult education realm. I'll introduce each of them prior to each of their presentations. But before we dive into those, I'd like to start by providing some high-level context for today's discussion. So first, and perhaps most importantly, we should answer a fundamental question. Why are we focusing on post-secondary education and skills training this morning? Well, to start, the twin forces of globalization and technological change, something I'm sure we're all familiar with prior to today, have accelerated during the past few decades. Labor market competition from overseas and things like automation have fundamentally changed the landscape of the U.S. labor market, forcing workers and employers to adapt to these developments. For these reasons and others, the skills and knowledge needed by employers has correspondingly shifted and also increasingly required workers to be lifelong learners. In response, the entry requirements into this new labor market have also changed. As we often heard from the Georgetown Center for Education and the Workforce, 2/3 of all jobs by the next decade will require some form of post-secondary education or training. Simultaneously, research has shown that higher levels of educational attainment correlate to better labor market returns. In other words, the more education an individual has, the more likely they are to be part of the labor force, be employed, and earn a livable wage. Over the past 2 decades, Americans have responded to all of this by vigorously consuming more education and training. Since 1996, the proportion of people with less than a high school degree has been reduced by 40%. At the same time, the proportion of people with a bachelor's degree or higher has increased by that same percentage. According to the Census Bureau, just over 1/3 of all American adults today have a 4-year college degree. These are remarkable achievements. While we expect these trends to continue, and they are extremely encouraging, there are still persistent skills mismatches that exist in certain industries and regional areas, a disconnect between the skills and knowledge individuals gain from our education and training systems and the particular needs of employers. This disconnect is all the more pronounced in the middle skills segment of the labor market, a portion of the job market that by some estimates accounts for nearly half of all jobs in our economy. These jobs require post-secondary education and training, but not necessarily a four-year degree. Despite great strides in getting more folks into a four-year degree pathway, the U.S. still lags well behind many industrialized countries for sub-baccalaureate attainment, making these mismatches even more evident. Historically, many of these jobs did not require post-secondary education or training, but given the trends I just touched on, they now require much more specialized sets of skills and knowledge that go beyond a high school diploma. The question I think really at the center of our conversation this morning then becomes, how do we ensure our investments in education and workforce development are equipping individuals with the skills and knowledge they need to be successful in today's economy? In addition to these trends, I also just want to highlight quickly some other data points that I think are important to keep in mind during the panelist presentations this morning. So according to the National Center for Education and Statistics, or NCES, over 1/4 of working-age Americans now hold a non-degree credential, such as a certificate, occupational license, or certification. Significantly, 85% of these non-degree credential holders report that their most important credential was for their current job, and another 67% of those said they earned it by taking classes from a community or technical college. Another representative survey of these individuals found that significant majorities found their credentials to be very useful for getting a job, remaining competitive in the labor market, and improving their ability to do their current job. As demand for these credentials continues to evolve, so too as the population post-secondary education programs are serving. Over half of all students enrolled in post-secondary education today are considered to be non-traditional, that is, on average, older than the average undergrad. And nearly 1/4 of all students in post-secondary education today are over the age of 30. While there are many federal programs in existence that seek to support this population and strengthen these credentialing trends, the largest investment in America's workforce today remains the Higher Education Act, legislation that dwarfs all other federal investments in this area by comparison. As we look towards modernizing this legislation and others, it is important that future policy recognize that there are multiple pathways, including a four-year degree, to success in today's labor market. And with that, I want to turn things over to Katie Brown, who is the Senior Federal Policy Analyst for the National Skills Coalition. Katie works to advance the Coalition's Washington-based advocacy efforts through federal legislation, agency regulation, and stakeholder engagement. In this position, Katie provides detailed analyses of current and proposed federal legislation pertaining to the post-secondary education system and post-secondary education programs across all disciplines. She joined NSC in 2017. With that, I want to hand it off to Katie. Katie?
Thank you so much, Steve. I really appreciate the introduction. As Steve said, my name is Katie Brown, and I am a Senior Federal Policy Analyst here at the National Skills Coalition. And I'll just give you a little bit of background about my work previous to joining the Coalition. Starting from 2011, I worked as a legislative staffer for 2 members of Congress on the House side. Both members were passionate about education. My most current boss, Glenn Thompson from Pennsylvania, was, or my most recent, sorry, not my most current, was the co-chair of the Bipartisan Career and Technical Education Caucus. So with that experience, I became passionate about the issue of skills and how it fits into the conversation around higher education. And I will talk a little bit about our coalition, just for some background. So the National Skills Coalition is a Washington, D.C.-based organization, and our mission is ensuring that every worker and every industry has the skills to compete and prosper. Our CEO founded the organization in the late 90s as a response to potential cuts to skills investments at the federal policy level, and we have since evolved into an organization that lifts up best practices across the United States among a number of stakeholders, including community college leaders, business leaders, labor organizations, community-based organizations, and the public workforce system. We are currently in conversations regarding workforce policy, higher education policy, immigration policy, and basically any sort of, policy topic that relates back to skills, which is most of them today, actually. All right. Okay, so Steve covered this in the beginning, but I'll just review sort of the evolving demand for skills in today's economy. And we look at the numbers back in the 70s, and when only 28% of jobs required education or training beyond the high school level. So a lot of individuals had a choice of whether or not they wanted to attend higher education. They didn't really have to in order to be successful in the labor market. But that has absolutely changed. In today's economy, almost all jobs, 80% of them require some form of post-secondary education or training beyond high school. And over half of all jobs today can be classified as middle skill. And I just put a note there at the bottom that middle skill jobs are those that require more training than a high school diploma, but not a 4-year degree. And that's where we're sort of seeing our skills gap. And when you look at the increasing labor market demand for skills and credentials, you can see that it has driven major changes in the characteristics of today's college student. And so we are seeing more and more non-traditional students engaging in the post-secondary education system. And non-traditional students can mean, anything from working full or part-time while attending school, parenting while attending school, having engaged in the labor market before and then needing to go back to upskill for another profession. So basically, the characteristics of today's student is fully changing. And so we're looking, as a coalition, we are very passionate about getting the message out there that our higher education policy, which is the largest investment in higher education, the Federal Higher Education Act, needs to be modernized in order to meet the needs of these student groups. Okay. And so leading into making the higher education work for today's students, I just want to talk quickly about our priorities as an organization. In 2016, we released a proposal for what we call the new Community College Compact, and it recognizes the growing role that community colleges play in equipping individuals for the labor market. And so that compact, which we formed from a series of policy recommendations from the stakeholders we work for. So we made sure we solicited input from leaders in higher education, business, labor, and workforce development fields. And so our compact has 4 points, and I'll expand on a couple of these and then can answer any questions about them later. The first point is to eliminate the bias against working learners by supporting the JOBS Act, which basically would extend Pell Grant eligibility to students enrolled in courses that are less than 600 clock hours. The second point is providing support services to non-traditional students by enacting the Gateway to Careers Act. And basically, as we've seen, because of the growing population of non-traditional students in post-secondary education, the needs of today's student entering the education system has changed. So, for example, if there's a student that's a parent or a single parent, they might need some type of child care to be able to have the time to go and enroll in a course of study. And so I'll touch on that in a little bit more detail, but that's something that we are very passionate about advocating for. The third point is to measure post-secondary outcomes to ensure program quality by adopting the College Transparency Act. And then the fourth point is to create a new permanent program to support industry community college partnerships that are becoming more and more popular and strong across the United States today. And that would be by enacting language from the Community College to Career Fund Act. So those are 4 of our priorities and 4 of the bills that are currently in Congress that relate to those 4 priorities. And I'm going to elaborate on the first 2. So the first one is the Jumpstarting Our Businesses by Supporting Students Act, or the JOBS Act, in which I mentioned this would be extending Pell eligibility to students enrolled in programs that are at least 150 clock hours of instruction over a minimum of 8 weeks, and that's instead of the current law, which is 600 clock hours over 15 weeks. And so this would ensure that students who are pursuing short-term credentials, this would reduce some of their barriers as far as cost, and they would be able to step right up into a course that would get them equipped to work in an in-demand field. One of the questions we get asked a lot about this topic is, how do you ensure quality of a program in short-term credentials? And we think that that's a really important question to ask. The JOBS Act does have a couple of quality assurance measures built into the language, and so I'll definitely elaborate on that if anyone has questions. But basically, what it does require that programs that are eligible for Pell are recognized as valuable by employers, industry, or sector partnerships, and that these programs also align with broader career pathways and basic skills instruction. And career pathways is something that is a concept that was set forth in WIOA, the Workforce Investment and Opportunity Act, and it basically just provides students with various exit and entry points into different programs. So the idea is to provide them with a pathway to success and exit points where they see appropriate for what they need. And also, the JOBS Act does require that any short-term program that's eligible for Pell does result in an industry-recognized credential as well. And then my last point, I will touch on the Gateway to Careers Act. This was introduced by Senator Hassan from New Hampshire back in February, and it does support the concept of career pathways, which I just described for non-traditional students, through dedicated grant funding. Specifically, what it does is it would provide a chance for partnerships who want to provide support services for students, so partnerships between an educational institution and a business, or an educational institution and a community-based organization, to sort of help provide direct support to students who need either basic skills instruction, case management services, basically anything that helps them to enroll and then persist and succeed in a career pathway program. And then this is just our website and a place where you can sign up for our member email list just to stay connected to our priorities. And that's it for me.
Great, thanks, Katie. Next up, we have David Baime, who is the Senior Vice President of Government Relations and Policy Analysis for the American Association of Community Colleges, or AACC. In this role, he directs the national advocacy efforts for the nation's nearly 1,200 community colleges and their students. Prior to joining AACC, David served as Director of Education Funding for the National Association of Independent Colleges and Universities, and he has also worked as the Assistant Director of Government Relations for the Association of American Medical Colleges. David, take it away.
Thank you very much, and thanks everybody for listening in. The community AACC represents the, as Steve was just saying, I mean, we represent the community college presidents across the country, and we have slightly more than 90% of all the public two-year institutions as members, so we have a very broad and diverse membership, you know, reflecting the different parts of the country and the priorities and so on. The colleges, of course, as you all know, are united by their efforts to try to make themselves, as available and accessible as possible, starting with their low tuitions and, of course, trying to be as close to and proximate to potential students as possible. The AACC, my organization, because of the nature of who we represent, I mean, we have a very, very broad reauthorization agenda, and I thought rather than duplicating some of the things that the other presenters have talked about. I wanted to talk about some of the slightly off-center or slightly non sort of specifically training-oriented things that we're talking about. But I did want to first mention in terms of the reauthorization the issue of short-term workforce development, because at this point in time it probably is the most important and highest priority agenda item for the community colleges in the reauthorization. And we've been very pleased by the fact that there has been included in the Prosper Act reported out by the Education Committee in the House the establishment of eligibility for programs between basically 1/3 and 2/3 of an academic year in length. That is a priority for us coming from our members. We've heard from many of them about the importance of getting some funding for students in these shorter-term programs, which our colleges are offering in much greater numbers, really coming out of the Great Recession. But over the last, one data point, over the last 15 years, the certificates awarded by community colleges have more than doubled in number in the national in terms of aggregate. So we're seeing, tremendous numbers of certificate programs being offered and being completed by students without significant federal support for a good percentage of those students. So we know that we would have higher numbers and perhaps a different population if those students were eligible for, in the shorter-term programs, eligible for aid. In terms of the Jobs Act and some of the other proposals that were just mentioned a moment ago, I think it's important for those of you who are listening to be aware that there's a lot of difference of opinion in Washington over exactly how to go about trying to provide additional support. There's bipartisan, bicameral support for providing new eligibility in this regard. It also extends to the Trump administration, which essentially endorsed the Prosper Act provision. But there are a number of programmatic variables, program design variables that differ among the many numerous proposals that have been put forward. One of them is whether or not a student should be eligible for Pell Grant only, as in the Jobs Act, and it's half of the discretionary maximum, or whether, as in the Prosper Act, students should be eligible for the full Pell Grant as well as potentially loan dollars. That's a really big difference. There's also differences about to what extent you might try to evaluate the impact of students who receive these credentials. My organization is reluctant to go very far in that direction. We don't see why there should be different standards placed on these short-term programs relative to other higher education programs, both offered by our colleges and four-year institutions. That there's, to some extent, I think, a little bit of a discrimination against these programs, which does, of course, get into the issue of fraud in the programs and program abuse, and that is undeniable to some limited extent, but we don't think that it would make sense to limit a lot of student access and program eligibility because of that. And again, we don't know why this particular subset of potentially eligible programs would be singled out in that regard. One final thing that we do think is important, and this is reflected to an extent in the Jobs Act, is for the short-term programs to have some relationship to pathways programs that are of longer length, because we know that for as important as these programs are, that it is over the long term they don't generally provide sustained growth in wages, and maybe even the jobs for which students receive training become obsolete. So we think it's important to try to write a law that encourages, if not limits, the funding to programs that are parts of career ladders or career pathways. Final thing I want to say at the political note, it's a little bit maybe impolitic to say it, but since the statements have been made publicly, I'm not, I'm happy to do so, and that is that the four-year institutions with whom we have a lot of interactions as our partners in higher education advocacy, a number of those associations, without naming them, have expressed strong reluctance to provide this new eligibility, if not outright opposition in a couple cases. And the important thing to know there is that it's going to take sustained advocacy from the organizations that are focused on these particular programs to secure their enactment. I'm not going to go into as much detail on these other items on the AACC agenda. We are, as a sector, very involved in competency-based education, and we are hopeful that the Higher Education Act reauthorization will include greater eligibility for those types of offerings. The PROSPER Act is fairly expansive and broad in its eligibility in that regard, and so we think they're certainly headed in the right direction on that. There may be some tweaking language to maybe rein it in a little bit, but that overall it looks similar in terms of the language, in terms of what our colleges are actually offering and how those programs are structured. Again, we might want to, as the process moves forward, to put a little bit of guardrail on those. This is not, narrowly directed towards the topic this afternoon, or morning, but I think that the whole issue of students borrowing and their ability to repay their loans is very important, particularly in short-term programs, because it turns out that students who have the lowest amounts of debt, there's often are students who drop out, but students with low amounts of debt are those who have the highest default rates. And community colleges as a sector have an 18.3% default rate, and we think that is absolutely far too high and that we need to do something to reduce that. And we think one of the ways, best ways to achieve that is through restructuring and simplifying dramatically the loan repayment options. We also believe, related to the point I just made, that institutions should have some greater flexibility or ability to limit borrowing by students who might otherwise be eligible. We think that sort of the one size doesn't fit all when it comes to the millions of students who are eligible through these programs, and that not all community college students are equally well situated and good candidates for borrowing. And again, going back to loan default rate I just mentioned, we think colleges should have some ability to reduce loan maximums in certain types of programs for certain types of students. Next, we have a very robust, and this is dramatically oversimplified bullet point here, but we do believe that we need to have a national unit record data system that tracks students throughout post-secondary education and into the workforce so that we can document and be more accountable to policymakers about the impact of our programs, but more importantly that we can help students or potential students make the best choice about what post-secondary education program is right for them. And I would underscore, though, that students who need that advice the most and are not always those who are best equipped to interpret and understand data, and that counseling plays a very big part in helping students select the right program and then complete that program. And then finally, this is again not narrowly focused, but it's on the topic, but of the innovation. But it's really important for us to have a Department of Education that is less intrusive and less heavy-handed in terms of regulation and imposes lower costs on institutions implementing Title IV. So that's a bit of our legislative agenda in terms of HEA and the innovation aspect of it. The website that you can see up here has a lot of information. If you go to our advocacy page on the AACC website, we have a variety of policy statements and just greater detail on the things I mentioned and other things as well. Thank you.
Great, thanks, David. Last but certainly not least, we have Lindel Fields, Superintendent and CEO of Tri-County Tech. In this role, Lindel leads Tri-County Tech, a small but mighty career technical education school in Bartlesville, Oklahoma. His first action there was to draft Vision 2020, a fearless and bold initiative intended to establish Tri-County as a premier education institution and one of the only schools to decline federal funding in the United States. Tri-County's mission is to provide life-changing experiences for its diverse student population. With that, I want to hand it off to Lindel. Lindel?
Thank you, Steve. It was about 3, maybe 4 years ago that Tri-County embarked on a new endeavor to put in what we believe to be innovative programs that we now call flex programs. These programs were intended to help young adults in our community get the education they so needed and deserved. We noticed that there are lots of young folks in our community, good people working hard, 8 to 5, trying to make ends meet. They look up and it's been 10 years since graduation from high school, and those days are long gone, and perhaps the dreams they had hoped for hadn't quite come to fruition. They're working hard. They have a couple of kids. They're trying to go to t-ball games. They're trying to go to dance recitals and just living paycheck to paycheck. They know that their future is dependent upon education. However, quitting their jobs or putting the kids into child care to go to school just isn't a reality. In our case, we had full-time programs offered in the traditional way, 8 to 5, 5 days a week when most people work. And working in the evenings wasn't realistic. These folks, again, are good, hard-working people, but they couldn't see the light at the end of the tunnel. Because of that, we implemented flex programs at Tri-County. Our traditional programs offered 2 nights a week and 1 Saturday a month. Accelerated programs, the same as our traditional programs, we learn that a motivated adult can get the training they need in about half the time that was required for the programs to qualify for federal Pell Grants. We tried the old way of having programs 5 days a week in the evenings, and that just isn't realistic. In fact, I think of a young man named Kevin who came to us, enrolled in one of our engineering tech programs. He was a stay-at-home dad, had 4 kids. No way he could put 4 kids in child care, go to school full-time, or even work for that matter in their limited income. But the flex programs opened up a whole new world for Kevin. So when his wife got home, he went to school 2 nights a week. And of course, being accelerated, there's lots of homework, but again, the time away from home wasn't unrealistic. Kevin came to our engineering program, and 11 months later had the education he needed to go to work at Chevron Phillips, making a very, very decent living. So now he has the resources, the means to have a kind of life that most people dream of at Tri-County, and that's consistent with our values. Our values are a great place to work, investing in the community, leadership by all, and student-focused. So the flex programs at Tri-County Tech have opened up a whole new world for young adults. It now represents about half of our enrollment. We hope at some point it will represent near 100% of our enrollment here at Tri-County. And one of the great benefits of offering the flex programs is that we break even on these programs because we have the facilities, and one of the beauties is that we have instructors that are full-time instructors that are willing to teach these programs, again, because they're only 2 nights a week and 1 weekend a month, so they can supplement their income, and we're not necessarily having to train adjuncts who have great business skills, but maybe not the teaching skills that we need. So we found this to be a win-win. We now offer these programs: engineering tech, culinary arts, medical office, welding, machining, paramedic to come online this fall, just to name a few. So these are affordable programs that, again, are opening up a whole new world to young adults. Lock, Stock, and Barrel, our most expensive program, is $3,000 here at Tri-County. And as was mentioned, we don't take federal financial aid, federal student assistance, Pell Grants, any of that. And we did away with that because the hour constraints on certificate programs, minimum of 600 hours, which provided very little funding to a student. And so we decided to eliminate all of that and offer the programs on our own. Our foundation helps the student, but in all cases, the student must provide 1/3 of their tuition so they have skin in the game, and we'll let them pay that money out, but we do not offer loans, and that's one of the mistakes we made. We thought that after the students graduated, got their jobs, and went to work, they would pay back. But as was mentioned by an earlier presenter, young folks with the least amount of debt often have the highest default rate. So students leave here debt-free. They can focus on paying their bills at home. They have skin in the game. Their heads are held a lot higher. And a question that might be asked is, what's your retention rate? Well, the success of our programs at Tri-County are measured upon a 90% completion retention rate or better. So we held that standard for our short-term flex programs as well, and we've been able to hit those targets, usually 92, 93%. So students aren't defaulting, they're not getting the Pell, but they're still completing the programs, and we still continue to work on them paying back. Next year, we'll be launching a work-study program so that the portion that they owe can be worked off here at our facility at Tri-County, again, so we can ensure they leave debt-free. So we're pretty happy about the success of the programs. We hope to expand the programs slowly but surely over the next few years. Our business community is extremely excited about what we're doing, and it's helped to have the business community at the table. So that's what's happening at Tri-County. I mentioned our values: great places to work, investing in the community, leadership by all, and student-focused. And these are things we began to measure back in 2008 as a result. You can see some of our success measures there, but none of that really matters. It's really about the students getting out and ultimately going to work. That's what's going on at Tri-County. Steve.
Great. Thanks, Lindel.
You're welcome.
So I want to kind of hitch off where you sort of ended about supports for adult learners. This is a question for, I think, David and Katie specifically. What kinds of federal policy modifications could we make, and how can federal policy programs or federal policy support programs that better support wraparound services such as child care and transportation costs?
I'll go first here, and Steve. And you know, the fundamental role that the federal government plays, just to remind everybody, is in providing student financial assistance and funds for students to be able to pay for their college expenses. And the government's role in providing a lot of institutional supports and programs, as important as it is in selected circumstances, and of course there's the Carl Perkins Act, there's the Workforce Investment Act, which provides some direct funding. There are a number of programs within the Higher Education Act itself that provide support for colleges to enhance their program offerings. But having said that, the overwhelming involvement of the federal government is with student financing. And so for my organization, it's critical that the government and Congress continue to fund those programs at a robust level. We're very pleased that we had a $175 increase in program maximum for the award year that starts July 1. In terms of adult students, there's always a need to make sure that adult students aren't being penalized because of the work that they do, and that the need analysis system is calibrated fairly to them. We don't have a position on this, but that is to say, on changing the existing assessments of working students' income. But we certainly have encouraged Congress in a variety of contexts, including the comments we submitted, to take a look at, you know, how these students might receive greater financial support through the student aid programs. The problem is really maybe twofold. They're related. One is of course, the added cost of the program, particularly Pell Grants. We're very sensitive to that. And two, there's an equity consideration. You want to make sure that the various student populations, there are three different sort of subgroupings in the way that the aid is provided, that they're treated equally fairly, and it's not a simple thing to do. In terms of the non-student financial aid programs, though, and the supports that are needed, there is a child care program. It's a small program. It received a big funding boost in the recent omnibus appropriations bill. It's very important, and we strongly support that. Of course, there are the TRIO programs that help disadvantaged students and minority students come up to help them integrate into college and succeed in college. There's not currently a program that is designed to provide counseling and sort of whether it be academic or financial for students being offered by the federal government. We haven't proposed one in this reauthorization simply because the environment for creating new programs is not one that is conducive to getting them put on the books and getting them funded. And the PROSPER Act I've referred to a couple times eliminates the unfunded programs, the Higher Education Act. But I would say that if Congress were to consider adding programs that would, non-student aid programs that would be designed to enhance student success, that a program that focused on giving institutions some greater support for academic counseling and perhaps some curricular restructuring and reform along the lines of guided pathways, we think that that should be absolutely right at the top of the things that Congress should be looking at, because as I'm sure most listeners are aware, there's a lot of evidence that for as important as student financial assistance is and having funds to pay for college, that also having the right sorts of institutional supports is an essential component of student success.
Great, thanks, Dave. And Katie, could you speak a little bit about what your coalition is doing in terms of federal advocacy and promoting sort of coordination across federal programs like HEA and WIOA, perhaps the way to fill that kind of need?
Yeah, absolutely. So as I mentioned before, student support services, especially for non-traditional students, are a big focus of our coalition currently. And I think that's because, you look at, like I said, the makeup of non-traditional students and students such as Kevin, like Lindel described, maybe facing some barriers that your, 18 to 22-year-old students, first-time, full-time college students going away and living on campus wouldn't face. And I think the good news there is that there is recognition in Congress that this is an issue. The Senate Health Committee is still in the process of drafting their version of a Higher Education Act reauthorization, and so they were holding regular hearings, basically one a week, to talk about the Higher Education Act and how it could best be modernized to fit the needs of today's students. And there was plenty of questions from members of Congress about, how do we support students outside of tuition assistance? And I think that's a really valuable question. As David mentioned, there are existing programs such as C-Campus, which is a child care program, and it did just get a funding bump, which we were very happy to see. And that's a Higher Education Act program. There's also, there was the College Access Challenge Grant program, which has not been renewed. And then there were what was called the tax grants, which were actually through the Department of Labor, and that was more institutional support provided to community and technical colleges to offer support for students. So I think the important thing to recognize here is that there are existing programs. They are across departments, so there are some programs in the Department of Education, there are some programs in the Department of Labor. What we're advocating for as an organization is to make sure that we have a permanent federal funding stream for these support services in the Higher Education Act. And the language that's included in that would line up with WIOA, so it would line up with labor programs, and it would make sure that those programs are streamlined. And I do want to also add that, several states are doing this on top of trying to help students with tuition. There are states that are also providing support services with their own funding, such as Arkansas, Iowa, and North Carolina. They're using a patchwork of funding right now. They're using, anything from TANF funding, and just basically their state funds that are allocated to them. The problem with that, and these are fantastic programs with great outcomes, the problem with that is that the funding isn't permanent, and so they're having a hard time sort of relying on that and being able to build out their support services because there's sort of this uncertainty with funding there. So that's sort of the advocacy that our organization is doing on that topic.
Great, makes a lot of sense. And Lindel, I know we've talked a lot about sort of the policy landscape here. Kind of digging down a little bit deeper to get some more specificity on what we're talking about. What are some specific services that Tri-County offers that helps adults, participate in these flex programs?
That's a great question. As I mentioned, our programs are affordable. We have a foundation in place that is very generous in that it'll help provide up to 2/3 of the cost of the program. And so students supply us with where they are financially, and we have our own system for doing that, and they can get up to, again, to 2/3 paid for. So we help them financially. We also have a portion of our foundation that's available to students for what we call emergency assistance. So if students need temporary assistance, and we want to focus on the word temporary because we want them to get through graduation. In other words, remove any barrier that could keep them from coming to school. You know, a young adult whose car battery died this morning could potentially cause them to drop out of school out of frustration, finances. So we make it real clear that if the battery goes out and you don't have the money, we will buy you a new battery or tires or put food on the table. Again, this is temporary assistance, not to be long-term until they can get the skills needed to go to work. So that's been the primary use, and then all of our support services internally. We have a beautiful and very effective child development center that works for our full-time students. We've yet to expand it to our evening. That would be a very intense and financial impact on us. So that's something we know that's there, but we feel like removing the barrier where people can actually work and go to school, keep their full-time job, is the biggest barrier we removed. So I think those would be the primary things that we're doing, Steve, to help accommodate those students in flex programs.
Oh, that's great. It's great to hear. And just as a reminder to everybody tuning in to today's webinar, if you have any questions, please send them our way. Our hosts are collecting those right now, so please be sure to send in your questions. Kind of changing gears for a second, Katie, you mentioned some of the work that specific states are doing to increase access to short-term programs already. How do some of these programs work? Things like the Iowa GAP and Virginia New Economy and Workforce Grant programs. What are the kind of nuts and bolts of that? What does that look like?
Sure. Yeah, so as I mentioned, states are seeing the value in increasing access to short-term programs. They're seeing that they're facing worker shortages across industries, that folks that are working in high-demand industries are retiring, and that, they're sort of struggling to build a permanent pipeline of skilled workers for their employers. So basically what states have been doing is have been turning to community and technical colleges and supporting them, partnering with businesses to offer these short-term credential programs. And so basically, well, I will say actually before I proceed that our coalition recently released a publication about short-term programs and their value, sort of the role that they play in workforce development, the student profile of who sort of pursues these credentials, their outcomes, and then we did also highlight 2 states, Iowa and Virginia, and sort of what they do. And so Iowa, I'll start with Iowa, their program is called the GAP program, and they named it that to sort of signify that they're trying to fill a gap in tuition assistance for short-term programs, because currently there is really none, at least at the federal level. So the state government voted to pass or to create an Iowa Skilled Worker and Job Creation Fund in 2013, and basically the fund is a collection of programs geared towards worker training and retraining, technical skill development, and job creation. And so the fund supports the GAP program. And the GAP program helps students cover the cost of enrolling in particularly non-credit short-term programs. And I'll get into that a little bit later as well, but non-credit programs are important and play an important role in workforce training because they tend to be able to be more responsive to changing industries. A lot of that is because of the way that they are evaluated. Basically, just the turnaround time for getting a course ready, approved curriculum and equipment is faster for non-credit programs, and so the GAP program is specifically for non-credit programs. And students in Iowa are eligible for this assistance based on their financial need and also their projected capacity to achieve certain outcomes. They must be able to demonstrate through interviewing their ability to complete an eligible certificate program before being eligible, and the amount of tuition assistance just depends on their particular need and the program that they're choosing to enroll in. And I will say that community colleges in Iowa, particularly Kirkwood Community College, which is who we highlighted in our publication, they do work with industry stakeholders to determine which courses are important to their local economy. So basically what they do is they use local labor market data to determine what is an in-demand occupation, and from there they work with employers to develop curriculum, and then yearly these programs are reviewed and determine if they're still relevant, if the coursework or curriculum needs updating, and then they obviously look at outcomes, and they do have pretty good outcomes. Their average, so they started in 2014, and so for their first academic year, they had almost 2,500 participants. The average age was 33 years old. So again, just to point out, these are individuals who may not have been able to engage in the post-secondary education system if this option for a short-term program was not available to them, because maybe they don't have the resources to attend a 2 or 4 year program. But then their completion rates are about 75% across participants. And then Virginia's model is similar to what Lindel described, where they are a pay-for-performance model. So what they do is they have the student be responsible for a third of the cost of their short-term program. The state is responsible for the second third, and then the community college is responsible for the third only if the student does not complete. If the student successfully completes the program, then the state pays for 2/3 of the cost, and the student pays for 1/3. So everyone has skin in the game. The student has skin in the game to make sure that they're performing and attending and doing all of those things. The institution has skin in the game to make sure they're focusing on student achievement, and then the government, who is funding this program through the New Economy Workforce Grant Program, they also, obviously have an important role to play. And in Virginia, the eligibility is also based on financial need, and the average age of the students is similar, 36 years old, so a little bit older than that in Iowa. And then they have a 95% completion rate and 8,800 participants since they started their programs. They also engage very closely with industry, and again, they have a board that advises them on, which credentials are in demand and what is needed, what the curriculum should look like. So everyone really works closely together in both of these models, and they have fantastic outcomes.
Sounds like there's a lot of great work going on in the space, Katie. I'm really glad that you brought up the issue of non-credit programs in particular. I remember when David was speaking earlier during his presentation, he noted that certification programs have doubled more than recently. How do we improve the data collection and general transparency in this space? David? David, are you there? May have lost somebody. Well, let me change gears for 2 seconds then. Katie, this is a question directed back at you. Both you and David mentioned a little bit different proposals in terms of how changes to Title IV HEA could better support short-term job training programs. Could you go into some more detail about how the coalition's approach differs a bit from the community college's preferred mode of legislation?
Sure, absolutely. So I will just set the stage and say, you know, this is an ongoing conversation about how we can best both increase access to short-term programs and also ensure quality. And so this is, you know, something that we're still working through. There is no, you know, silver bullet or perfect answer to this question, but I will just share a little bit. So in the PROSPER Act, which was the House introduced Higher Education Act reauthorization, there was a provision in there that would just drop down the hours that are required for a course to be Pell eligible. So right now, like I mentioned before, in current law, it's 600 hours over 15 weeks is the amount of time you have to attend a course to be eligible for Pell. The PROSPER Act dropped it down to 300 hours over 10 weeks, but did not provide any other parameters around those programs. So it didn't say that, you know, programs had to be vetted by industry, didn't require them to have an end in an in-demand credential. And so what we think as a coalition from getting feedback from our members, and again, we work with everyone across, you know, education, labor, we work with students, and so what we have gathered is that people sort of, you know, they want to see some type of parameters in federal law if we're going to open up these programs to Pell Grant money. And so we absolutely agree with that. The opinion on how many parameters and which type of parameters differs. We as a coalition support the Jobs Act, and I'll just go over the quality assurance measures that are within the Jobs Act just to give you an idea. So relating to employer engagement, Pell-eligible short-term programs must provide training aligned with the needs of local employers. So this means the Jobs Act passed and an educational institution wanted to provide a short-term program that was Pell-eligible. They would have to use either labor market data that was local or federal or statewide to show that there is a need for this particular program and that it's aligned with the needs of local employers. And then also the Jobs Act does state that Pell-eligible short-term programs must connect with a career pathway as defined by WIOA. So this basically means that in an ideal world, you know, you would have a career pathway program. So for example, if you wanted to be a welder, you could take an entry-level welding certificate course, get that, and then you can either continue on an academic pathway, either to another stackable certificate or a degree program, or you could just exit at that point and find, you know, work with a welding certificate. And so ideally we would like to see short-term programs that are eligible for Pell connect with a career pathway. But the bill does say if applicable, so it doesn't apply. It won't apply to every program across the U.S. because everything is different. And then it also says that the short-term programs must culminate in a recognized post-secondary credential. Still, that is, you know, we're still working on defining that basically across industry because some credentials are recognized by the state, some credentials are recognized by associations, and so it differs there too. And so I think the different approaches are, you know, or the question is, should we drop down just the hours for Pell eligibility and not really put other quality assurance measures in place, or do we need other quality assurance measures, and what should they be, if that's helpful?
That's super helpful. Makes a lot of sense. David, are you back with us?
Yeah.
Perfect. It's my understanding from the community college's perspective, in addition to some differences around the quality assurance mechanism, there's also a different approach that you guys have advocated for in terms of the legislative mechanism that would divert funding towards short-term programs. Do you want to describe that a little bit more?
Well, yeah, and I think, you know, just to kind of get back to the point that Katie just made, I think it's, you know, I think it's important that my organization thinks it's important that we be somewhat flexible in terms of the, you know, our approach on the legislation. And I'll talk about our proposal in a minute. I mean, I mentioned this, you know, a few minutes ago, but the fact is that there's there really are legitimate questions about, the best way to go about financing these, these programs. And so my membership is really interested in, working with Congress in a kind of a cooperative way. And the main thing that the colleges are interested in getting is some more support. And just to give you, I mentioned a couple of these things earlier, but just, one thing is that there's also a very, and this is the Jobs Act allows this. There's some differences of opinion, though, about to what extent we should fund non-credit programs. And the primary reason why we feel that way is because we really don't know as much about these programs nationally as we might. And before we go into providing major amounts of support for that, we need to make sure what the expectations of Congress is going to be in terms of outcome there, because when you go into the non-credit side of the entity, as essential as that is and as large as that is for community colleges, you're in some very different territory from programs that are offered for credit and are generally for provide a certificate by the institution. Of course, one of the reasons, as I'm sure some listeners will know, the reasons why we have so many non-credit programs is precisely because of the Title IV limitations. And some of our presidents tell us, well, I couldn't make that program work under the time constraints. And Lindel was talking a little bit about this just in terms of their program offerings. And so we want to, literally the federal standards are dictating what our colleges are offering. So that's just another thing for us to reckon with, but it's a very, very important issue. But to your question, Steve, what we put forward early on in this process was actually a way of trying to address some of these very thorny issues about how you provide this new funding in a way that is going to be is going to get public support, is going to get congressional support, and is going to be used most effectively by colleges, all the while being very sensitive to the cost of the Pell Grant program, which, and as Katie was just saying, and as I mentioned earlier, the PROSPER legislation is actually very liberal in terms of the eligibility to provide. The Jobs Act would provide less funding. But we're very concerned about the potential for a major increase in Pell Grant funding through potentially additional eligibility. And also, we know that we're dealing with what generally is a fiscally conservative Congress, although, of course, what happened recently is not that, but in terms of the omnibus bill. But so our proposal, again, just to get to your question, is that we thought that the best way of satisfying the concerns about additional spending in the Pell program, about some people who are fiscally conservative, and also some of the difficulties of defining, and we also just heard about differences of the programs being, the career pathways model being applicable to them. But what our proposal is just to give colleges a fixed amount of money relative to their Pell Grant authorization or their expenditure of the previous year, the recent year for which data are available, and to let the college decide, let the institution decide how the money should best be spent in terms of programs. So let's just, and our proposal was for 2% of the Pell Grant expenditure, which is a very modest amount of funding. So if a college had gotten, for example, $1 million in Pell the preceding year, two preceding years, they'd get $20,000, and that was tailored, for a fiscally conservative Congress, and no two ways about it. And I think we actually, would rethink that at this point, but the proposal's been, circulated. But the point of it is that if you give the institution the ability to prioritize where they want to invest these funds, that would be the best way for the college, for the funds to be expended most efficiently and effectively and in keeping with local priorities, rather than trying to determine from the national level what sorts of standards to apply to these programs. And getting back to what I started from a while ago, that we're not, having said all things I did about some of the nuance of these issues, like we're not really that crazy about attaching new eligibility standards to short-term programs that don't apply to any other higher education program. Because keep in mind that once your program is 600 hours or 2/3 of a year in length, setting aside GE, which is basically moribund at this point, the feds don't evaluate programs. It's up to the student to decide to use their money wisely. So the question for us is, do we want to basically limit this new eligibility in that regard? And we decided, no, we don't. What we'd rather do is just have the institutions decide what they think would be the most effective way of using the funds, and sort of let that be the motivation for making priorities in this area. Because one final thing I'll mention is that, and we know this, the data bear this out, is that not all short-term training programs are created equal, and that they're not at least based on the best data we have, they don't have the same positive outcomes. And so, and that's sort of inherent in some of the quality standards we're trying to apply to this. So we thought that maybe giving colleges flexibility would be, with a cap, is a way to go about it. And as this debate goes on, we think that, it's something Congress might want to look at. I think we would certainly advocate for something larger than what we had put on the table earlier in this Congress in terms of funding for that. So it's a long-winded answer, but it's basically giving local control while limiting expenditures and short-cutting some of these quality control proposals or dimensions that are not, again, applied to other Title IV programs, all the other programs that are Title IV eligible.
Okay. So it sounds like there are two sorts of visions to kind of get to the same, heart of the same issue. Lindel, after listening to both Katie and David's sort of perspectives on this, do you think that Tri-County Tech would accept federal funding if some of these changes were made in the future?
Wow, the question of the day. We were on the bleeding edge of this, and it was a philosophical decision that we made nearly 5 years ago to make these changes. At the time, federal funding represented about 10% of our budget, so it wasn't something we took lightly. But what we also recognized is that 10% cost us another 2%. So it was about $1 million, and but that federal money was costing us $1.2 million. So that was a significant amount of our local funding that not only was tied to programs that in many cases were we considered to be inefficient, TANF, for example. So we eliminated about 9 programs at that time. In doing so, we freed up a tremendous amount of money that we could apply toward the programs that we felt we could be the very best at. And that's just kind of how we roll at Tri-County. We want to be the very best at what we're doing or not do it at all. So in that vein, we still believe that student debt is out of control at the rate it's going, and that our approach seeks more student accountability. Students are being successful. So we would have to watch that very closely, thinking about the bureaucracy that might come with those dollars is not too appealing right now. So we'll have to see how the legislation rolls out, if it rolls out, and how that might look, and we would just consider it at that time.
Mm-hmm. I want to pick up on that last bit on accountability and data transparency sort of in this wider sort of ecosystem of programs, and kind of pose a question to, I think, Katie probably first, given the coalition's work in the workforce data space. Is there enough transparency or data to show potential students which programs lead to success?
Well, the short answer to that question is no, we think. No, so right now, basically, I'll lay the data landscape just a little bit, and I'm not the data expert here, so if there's follow-up questions, I'm happy to get that information. But basically, what we see right now is that colleges are collecting and reporting data to the Department of Education, but only on students who are receiving Title IV federal funding or federal financial aid. And so that, as you can imagine, does not give a complete picture of programs, program outcomes, you know, basically, as the director of our workforce data quality campaign always says, your education is one of the biggest purchases or investments that you make in your lifetime. And, you know, right now you can go out and find information on a house that you're going to buy or a car that you're going to buy, and it's pretty complete information, or there's a lot of resources. But as far as education goes, right now we see a disjointed system of data collection. And so what we support is called the College Transparency Act. It's a bipartisan bill that is both in the Senate and in the House. And what it would do is it would require all post-secondary institutions receiving Title IV funding to submit student-level data to the Department of Education's National Center for Education Statistics on all of their students, not only those students receiving federal financial aid. And then the non-Title IV institutions could submit information voluntarily. But the colleges would submit data to the NCES that includes first-time or transfer student status, credential level sought, program of study, credit accumulation and completion, full or part-time status, institutional grants or loans, and things like that. So basically the idea is that consumers or, you know, future prospective students or current students would be able to look up the program that they're either enrolled in or going to enroll in and see, okay, well, if I complete this program, like, what is my potential earnings, or what's my likelihood of getting a job, or how long will it take me to complete this particular program, and just sort of make smarter choices when it comes to their investments. And this bill, we support this particular approach because it would also protect student privacy, which is obviously a very legitimate concern that many people have. Basically, this information would be housed within the Department of Education, but it would not contain any identifying information, any personal information. And then the College Transparency Act also includes prohibitions on the sale of the data. There's penalties for illegally obtaining information, and strong limitations on disclosing any information about individuals. And the idea too, like there's also data that's collected across federal agencies, as we know, and so one of the goals for this legislation would be to house this data, but then match it up with other data that's out there being collected by agencies. And so this bill, we see, would provide transparency to policymakers, to students, to basically anyone looking to invest in education. And you know, it would also provide transparency for, you know, when people are picking their programs, and help get rid of the stigma associated with some programs that might be, you know, the program outcomes might not be well known, like, you know, welding or machining or trucking. Many people don't know that those are very lucrative industries, and so this would also help with that.
Let me just add real quick to that, because we don't have a ton more time, but is that, you know, we're very much strong endorsers or behind the Transparency Act. The issues about what colleges report and the data that the government has are very complicated, but I think the bottom line is that, in terms of just your question, Steve, about the adequacy of the data, is that when you don't have, you know, programmatic data about the earnings of students, that, you know, you've really got, in this day and age, you know, a major flaw in your system. And while more of this information is becoming available, some of it to the federal government, a lot of it through outside the federal government or through states working independently with their own data systems, or the federal government in some cases, that you really have you know, a need to change that, and that's something my organization is very aggressive on. And there is some language in the PROSPER Act that would, getting to what Katie was talking about, providing the only data individually is provided on students who get aid, although aggregate graduation rate data are provided, but that the PROSPER Act would require wages to be reported after 5 years and 10 years for program completers for students who get aid, which of course distorts the data. But the important point, the second one, is that you know, students or potential students, particularly the less well-educated students and, you know, less sophisticated students, you know, kind of by definition, they really need counseling. They really need help. They need guidance in terms of figuring out what program works best for them, because a lot of those students are so educationally underprepared and not academically inclined that they in particular need a lot of support from the institution. So getting back to your question a little while ago about, you know, ideally what we would receive from the Congress in terms of support, that this is an area, as one of those counseling items that I mentioned, where we would really like to see greater outside, some type of better guidance for students. Our colleges do provide it, but there's probably some more support from outside the institutions would be helpful. Colleges have a very difficult time setting priorities, and I won't go into that, but we would think that this would be a useful role for somebody to undertake, and just helping students understand the data that are available.
Yeah, and I want to drill down on that last point about sort of supporting students more effectively through guidance and advisement. Is there a role, do you guys think, in terms of that technology can play to help folks sift through all this information to find the programs that are right for them? Lindel, like, do you guys use technology in any way to kind of help students do this?
Well, I mean, the short answer is yeah. There's a lot of really interesting data available and packaged in ways that are designed to help students make decisions about what field career, as Katie was just saying, you know, is going to yield a certain amount of earnings for them on average. And of course, the on average is always very important to keep in mind for whatever level that you're dealing with. But what we find is that the students who, and you look at the studies of the data that are available, that the federal government's made available through the college scorecard primarily, that it's the students in some ways who there are a lot of students who need personal attention and human you know, wraparound or hand holding or whatever you want to call it, support to make, you know, good decisions. And when you actually sit down and talk with students at colleges, you realize, you know, how again, a lot of students, they're not like probably most people on this call. They're not people who have gotten college degrees or probably were fairly good students in high school. They're not well enough academically or accomplished enough academically even to know where their strengths might be. So they need a lot of careful evaluation discussion to kind of tease out where they're, you know, best going to put their efforts. Guided pathways is an effort to try to make students do that in an efficient way, and if they go down a path that isn't the right one, to correct themselves quickly. But, you know, presidents that I talk to are always very big on it being a, you know, a human being that's working with a student.
And David, I know you've mentioned this a couple times today. For those on the phone that aren't familiar, what are guided pathways?
Oh, well, guided pathways is essentially ensuring that it's a structuring of an academic course for a student that is in general areas. So there might be one that would be in, say, science, one would be in social science, one would be in arts and humanities, leading to a various specific major. And the point of it is to try to ensure that students, as they go through the college, are taking courses that put them on progress to meet their academic goal in a timely fashion that is one that is right for them. So that you don't have students, the analogy is cafeteria. You don't have students doing, you know, picking one from, you know, an English course there and a science there and a technology there and an art there, and then they find out that a year and a half through their 2-year program, they're not anywhere near getting credits to complete their degree on time. And believe it or not, this has been pretty common in the past. So
yeah, the 90 credit associate degree.
Absolutely. So it's a desire, it's a goal of not only ensuring that they don't accumulate excess credits, but also that they get into a field that is the right field for them and enables them to sample at you know, a more generic, general level their first term, you know, what that field is like, and enables them to refine and be honed down, their specific concentration or degree that they're going to get. So they might know going in they like to help people. So maybe they'll go into a health field, but whether or not it's going to be in phlebotomy, or whether it's going to be in a nurse assistance program, whether it's going to be in medical record, so it's really frankly it's also encapsulated as saying community college students don't do optional, quote unquote, is what one advocate of this approach puts it as. And so the idea there is that you want to make sure that students aren't wandering through a curriculum. And as I think back on my own 4-year college experience, I did a certain amount of that the first couple of years I was in college. I mean, it was fairly encouraged, and it didn't ultimately prevent me from getting my degree on time, but it's a luxury that a lot of community college students can't afford. And secondly, as I was saying, it's one that they're not even really well cut out to take advantage of.
Yeah, no, absolutely. Shifting gears here for a second, Lindel, this is directed towards you. Tri-County, does Tri-County use labor market information or wider indicators of the economy in terms of deciding what programs are being offered? And how does that process work on the ground?
Yeah, that's a great question. So the data that we look at for flex programs is much different than the data we would look at for a traditional full-time program. We would do quite a bit of labor market research, primarily using the Oklahoma Department of Labor statistics to determine what the job demands are and what the outlook might look like, and that served us pretty well. The flex programs, we look at that. However, we pay more attention to what business and industry is telling us. So a full-time program might take us a year, 18 months to get up and running. I can have a flex program going in weeks. So traditionally, business will come to you and say, I need labor now, Lindel, and I'm like, okay, so we can get a program in a year, and business and industry disappear. And so if we can get it up in 4 weeks, 6 weeks, 2 months, we're up and running, and we are okay closing the program if the demand's not there. So these are just-in-time programs. If our employees aren't going, or the students aren't going to work, we'll close the program. Keep in mind, these are flex programs that are offered on top of. They're self-sufficient. In other words, they're profitable for us. I say that word carefully. So if they're not being profitable for us, the students aren't enrolling and not going to work, we'll close them. So primarily for the flex, we're listening to business and industry and their demands and their commitment to hire our graduates.
Gotcha. And what's the process for soliciting that feedback from the private sector?
Right. So often what happens, just yesterday I had a meeting with an entrepreneur that's coming to town and has to do with training folks in the HVAC, electrical, and plumbing arenas. So what happens is business and industry seeks us out. Say, we need help. And the first question I asked them, I'm like, well, would you have a labor market issue if you paid 25% more? And, so it's a candid conversation. And the answer is, yeah, we'd still have a labor market issue. Industries are graying out. There's a skills gap. It's a real issue. So I asked them, are there others in your industry that are having the same concerns? Yes. Well, let's get everybody together, and then we start to have the candid conversations, and then we develop what the program will look like and go about it. And obviously we try to align it with industry standards and credentials if they're available. I think credentials, I mentioned our engineering tech program earlier. There's no credential for that, and these jobs pay somewhere between $35,000 and $55,000. So you have to be flexible in that regard. So primarily industry seeks us out, and then once we think there's a real opportunity, then we will begin to facilitate the conversations.
Okay, that makes a lot of sense. All right, well, it looks like we are just about out of time, so I want to turn things back over to Lauren to wrap us up today. So I want to thank you all for the discussion this afternoon. It's been wonderful. So Lauren?
Thank you so much, Steve. That was a really enlightening conversation. You did an excellent job moderating, and I'd like to thank all the panelists as well. You brought unique perspectives and a wealth of knowledge to this topic. That was extremely informative and will be a huge help for us as we move forward with the initiative. I'd also like to thank all of our attendees for joining us this morning for the Western Governors Workforce Development Initiative webinar series. And in particular, I'd like to thank the National Association of Home Builders, which is sponsoring this webinar series, as well as the rest of our initiative sponsors that have supported our work throughout this year. I'll be sending a wrap-up email later this week that will include a link to the webinar recording. It will also have the slides that you saw here today. So you can forward that on to colleagues who might be interested or go back and revisit parts of this discussion. This is, like I said, the last webinar of our webinar series. So for those of us who have joined us for a few of them, thank you so much for your interest and your participation. And as always, you can drop me a line at my email, which is eldanino@westgov.org, if you have any feedback on the initiative generally. So thanks so much, and thank you again to our panelists. Have a great day.
Thank you.